Power Producers Shop Talk, where we are refining and redefining the sales game by equipping you with the tools you need to differentiate yourself in the marketplace.
Listening to the podcast is only going to get you so far. Why not take your game to the next level? Check out Power Producer Basecamp on killingcommercial.com today.
Tactical skills that'll help you provide deliverable value to your clients and prospects.
Want to have the sweet swag that we send out from the Power Producers podcast for your clients and employees? Check out policyt.com today.
And action items that you can provide to take your prospects and clients to the next level.
Want to create an online presence but don't know how to start? Check out crushingcontent.com. It's done for you, so all you have to do is show up.
This is Power Producers Shop Talk, production redefined. Are you ready to feel the power?
What's up, everybody? Welcome to the Power Producers Podcast, where we are refining and redefining the sales game. Today is a Shop Talk episode, and it is going to be part one of at least 4 parts, possibly 5, with our good friend Zane Goldthorp from ProWriters. And there's been a lot going on with them, so I want to bring you all up to speed on that. But we're going to get into quite a few things over the next several weeks, what the current market conditions are, how to sell cyber in the soft market, why now is the best time, what are the top loss drivers people are seeing, what are the risk management things we can be talking about and recommending, and ultimately how do we round out our existing book of business to drive revenue for us and our wholesale and carrier partners. And Zane's always been a gracious guest to talk about all of those things, but part of it's because ProWriters does such an amazing job. If you work for them, or work with them, I should say, and if you don't, shame on you, number one, but number two, we're going to make sure that we get you all of his contact information so that you have the ability to reach out and get set up. I'll go ahead and play devil's advocate. Even if you don't think that you like Zane, because you can't get along with probably one of the nicest guys I've ever met in the industry, and all you want to do is use ProWriters for their education. ProWriters University is an extremely valuable tool that they have put up on their website to educate people like you and me, and honestly, a few people out there who think they know cyber better than they really do. It's worth your time and energy to go through that and learn, because this is not just something that you can do to make more money for your agency. It's something you can do to protect your clients and also protect your E&O policy for having to respond if you're not at least even offering it. So with that being said, Zane, what's up, man? It's been a few months since we've had you on, but I mean, I feel like you're a regular at this point. You're like Shane Gillis on Kill Tony.
We did one. I think we did one right before. Then we were together in Key West, and
Yep.
and that went awesome. So good to be back.
Yeah. So listen, quick, because I'm sure people will have questions about this. And I mean, I know that as soon as I saw it drop on the wire, I immediately emailed Brian Thornton and said, "Hey, what's going on?" But y'all have had some organizational changes in that ProWriters was acquired by Victor, and you're part of that umbrella now. Maybe talk about that a little bit and what that looks like. And then I want you to get into kind of where we're at right now in the market. What are you seeing? I know it's soft, but like maybe talk about what that means too.
So we got acquired. It was official effective 6/1 by Victor, and so we've been 3 months in, and it is all going great. We are still operating fully independently, but it's one of those we are actually getting all the extra resources. And the Victor team is a program manager, so we're starting to learn a lot more about their products, and they're going to have a lot more that we can actually help sell as well. So it's going to widen our offering. I was talking the other day with somebody. We talk all the time about cyber for contractors, cyber for manufacturers, and we're always focused on cyber, but they've got products for the E&O as well, and they've got specialty for the E&O. So it's only going to be a perfect fit for us to kind of start pushing both together. So far everything's going great, and we're really kind of getting off the ground and running with it.
Nice. That's good that they'll have some more products in there. Will they be specific, like contractors E&O type of products?
Yes. Yeah. So they've got contractors E&O, they've got manufacturers E&O, they've got A&E, and so I actually just when I found out they had A&E, and my immediate mind was, okay, I don't have a CyberU video for A&E, so immediately started building. Got a CyberU video about to drop about why A&E needs cyber, but then we'll probably start building out as well to start looking at at how we push the E&O for those lines as well. And
I've only got
real
one.
estate, nonprofit D&O, they've got a lot.
Nice. Yeah. I've only got one A&E account. But you know, that it's got the cyber with it. I think
Yeah.
that's a good idea. And there's not
Well,
a lot of people that know why.
and it's funny because for us internally, we've got a broker who's has extensive experience in those lines too. And then we just got another broker that just joined us and she's got extensive experience. So I'm just looking at it like, oh, this is perfect. I mean, we already have the in-house knowledge and now we've got other products. And we've been preaching about this from a cyber standpoint. So let's take this a lot further.
Yeah, I mean, it's an easy transition too, because
Yeah.
a lot of these contractors, they don't, they may understand like that they need, you know, like a contract or probably more frequently is a contract is going to require them have
Exactly.
some, you know,
Exactly.
coverage there, but they're not even going to think about the cyber. So it's
No.
a natural transition and, you know, just to have that discussion with them because I
Yeah.
mean, those are, that's an industry that doesn't realize how exposed they are.
Yeah,
And I
exactly.
mean, maybe it's starting to gain awareness because I mean, we've talked about it and I think it's been in the news a bunch over the last few years, but some of these, you know, big time cyber breaches have come from, you know, infiltrating through a contractor's door, you know, so
Yeah.
to speak.
I think the contractors are probably more aware of it. I think at this point, the challenge is more getting the agents to be aware that your contractor is strongly, liable and you need to protect them. So it's, the awareness is getting better, but it's getting people to push harder on it, I think.
Yeah,
Um,
I was just gonna say, and also like the coverage for I mean, depending on size, obviously, but you know, most of these smaller and mid-sized contractors, I can't imagine that premium's going to be too insane
oh,
on cyber.
you're
Um,
looking at minimum yeah, if you're talking to a smaller contractor, you're going to see lower premiums for sure. And it's we'll talk about the market more, but it's a soft market. It's a great time for them to be buying. But and then
well,
when you
let's
talk
talk.
about contracts,
Let's.
it's funny because I finished up it was just about done with the A&E video, and I got a friend who's a architect with an architecture firm. So I sent it to him. I was like, hey, I need you to watch this and just make sure I, know what I'm talking about. I got all these terms that I'm using. And he watched and I talk in that video about the contract requirement. A lot of these contracts for an architecture firm require cyber. And he texted me back and he said, it's so funny. He said, I just was in a bid where I was reading the contract and there's a requirement for cyber. So
Yeah,
it's definitely out there.
no, for sure. Yeah, I mean, more and more stuff when people send me their requirements for things that they're getting into, it's in there, and
Yeah.
it's in there at 5 million. It's not, you know, it's
Yeah.
not just, you know, and same thing on the E&O too, especially on like your tech E&O. A lot of those, even for I've got, you know, this is a small company. I mean, they did like maybe 1.5 or 2 million in revenues, you know, so nothing crazy, but I mean, they were being required 5 on both.
Yeah. Yeah.
You know,
Everybody's scared. We've seen the claims and we've seen the stuff that's big. So everybody's wants to make sure they've got everything covered and they want to make sure that we've seen a lot of these claims that are where third parties are being affected, where it's
yeah,
not your fault, but the company you do business with. So I think the contract requirements are only going to get stronger moving forward. I definitely believe that.
no, I agree. You brought up the market and what that's doing. Why don't we kind of transition into that a little bit if you want?
Yeah, so it is, you can go back, if we go back to 21, 22, the market turned upside down overnight. We were to the point where it couldn't get any softer, and it legitimately overnight went just the hardest market we've ever seen. And it was a scenario where if you didn't have everything, EDR, MFA, all of that, you couldn't even get a quote. It was crazy. And then premiums were tripling, quadrupling. And that was about 2 year span that happened. Then 23 hit, and it just about went backwards about as fast as it hardened up. It started softening, and so for all of 23 and 24, it kept going back. And now we feel like we're at an area where it may be kind of leveling off, but you just never know. I mean, my experience says when everybody's talking about, oh, all the data says things should be hardening up again, there's usually a lag. It can be a few years longer than you would anticipate. But what it means right now, I think for agents or for the insured, the buyer, it's fantastic for them because it's the cheapest rate you're going to find. Like right
Mhm.
now is the time. If you have not been looking at cyber or taking it serious, now is a great time to be doing it. It is easier to get. The requirements are lower. Now I'll talk a little bit more on that later because I don't think you should just ignore that you still want to have the strong security. But from a pricing standpoint, you're going to get rates that are probably as low as you're possibly going to see. And you're going to have more options from all the different carriers. So the competition is strong and you're going to get better coverage at a lower price.
Was there a trigger event for for both of those? Because I do remember, this happening. Like it was super
Yeah.
get quotes, and then it was just I mean, it, everybody's guilty of it, man. Put in the minimal amount of information, they spit back a quote, you can turn it around.
Yeah.
It's not really the right way to do it, as we know, and
Yeah.
kind of talked about that and made some changes. But it's like you said, 21, 22 overnight, it flipped. Like something had to have happened, right?
Yeah. Oh yeah. Oh yeah. So really I mean, you got to go back many years to be honest. I mean, you go back, take 14, 15, 16 when cyber started doing this. Every carrier, every MGA possible, every startup was diving in. They saw money in cyber. They're all getting in. They have no idea what they're underwriting. They have no clue, but they're writing it for as cheap as can be. So, I
Mhm.
mean, that you let that happen for 3, 4 years in a row, at some point they're going to get burned. Well, 2020 we have coronavirus and the whole country goes remote overnight.
Yeah.
Everybody goes remote. Well, the IT teams, nobody was prepared for that. Nobody, people are all of a sudden working on their home laptops that have no security. And so that kind of triggered a huge amount of claims. We saw a big increase in ransomware. We saw a lot of loss hit very quick. And so because of that, that's what the carriers, a lot of those new entrants who are underpricing everybody, they just burned out. I mean, they were just gone overnight. I mean, we
Right.
saw large carriers. I mean, we saw very large carriers just stop their cyber book for a 2 year span. And so all of a sudden now the capacity just shrinks down to very little. And the carriers are sitting there, they're able to charge 3, 4 times premium. But more importantly, they're able to underwrite if they're looking at new business, it's essentially if you don't have everything
Yeah.
we want, we're
Yeah.
not
They can be
quoting you.
really, really picky about it.
Yeah, and they're getting the premiums because everybody's desperate to get the coverage, but they can't get it anywhere, and they're desperately seeking. So the carriers were in full control. Well, so then you go that 2 year span, carriers are only writing the best of best business that have the best of best security, and they're writing it at extremely high premiums.
Hmm.
Well, of course, their profits were going through the roof. So then you do that for 2 years, it goes right back to the original days where all these new entrants are saying, "Oh, look how much money they're making in cyber. We want to get in." And so the kind of the private equity is coming back out, and they're all starting to dive back in, and so it just kind of drove things to immediately start moving back to softer conditions.
Got it.
Yeah, I think it's interesting, man, because cyber has really gotten into a soft market extremely quickly, in my opinion. We went from, I mean, I feel like it was like 2 or 3 years ago.
Right.
It was hard. Like it was hard to get stuff placed. Pricing was through the roof. Couldn't find coverage for MSPs anywhere. It was just like the litany of things kept you from getting it done. And now it feels like you can get everything done no matter where.
I,
Or
I
what the class of business it is or whatever. And I'm wondering, like, from your perspective, what changed? What is it? And I know part of it is the carriers got better at understanding individual risks. They got more um, granular in a lot of the applications so that they knew more about what was going on in the businesses. They started putting the requirements and things on, and we'll talk about some of that risk management stuff like EDR and two factor and all of that in another episode. But I mean, is it really that simple? They just started asking better underwriting questions and required risk management techniques, so loss ratios dropped, or what's that all about?
I mean, that's what we just talked a little bit about how coronavirus changed everything and made things go hard really quick. But during that period, the carriers they were making so much money because they could charge whatever they wanted. and they could ask for whatever security they needed to see. So for a 2 year span, the carriers were only writing the best of best risks and getting a lot for it. So that essentially, when the profitability was being seen, just like back in 14, 15, the new entrants just started diving in and saying, "Hey, we're going to use cyber to make money," and which is kind of one of the things. I say that a lot, and it's maybe I guess I'd call it a pet peeve, but you see people looking at cyber insurance as a way to make money, and it's like that's not really the best mentality. Like we got to look at this more of protecting the insured. How do we provide this in a manner that protects the insured? But when the P starts flying in, though, it makes things open up, and everybody's just kind of going. They have to sell. They have to essentially a new entrant is going to try to buy the business. They've got to come in and just underprice the entire market. And so we've been seeing that for you've been doing this. We've been seeing that the entire time for 20 years now. We've been seeing these new entrants. You'll hear us talk all the time. Oh yeah, you have a cheaper quote. It's half the price of the rest of the market. Well, do you ever stop and think, why is it half the price? Have you asked about the experience? Have you asked about what their claims handling is? Have you asked, what's their long game? And so, we've seen it for a long time, and we've also seen the top carriers who have been able to sustain and make it through all the different market shifts. And that's what I always tell people ultimately is you want to be with the carrier who knows, understands this stuff, and they're in it for the long haul. They're actually looking at, protecting you for the long haul, not just making a quick buck.
I don't know the answer to this, so I'm going to ask it. But I mean, how many new players have we seen enter the marketplace here in just the last little bit? I know you talked about it. Maybe when I stepped away for a second, you and Kyle drilled down on it a little bit more. But I mean, I feel like I'm seeing new program names, new company names,
Oh,
popping up. And I mean, I don't know if it's equivalent to what we see on more the standard line side, but I feel like even with like general liability, workers' comp, and all of that, there's been a lot of stuff that's come out that is kind of very easy to use, insurtech flavored, streamlined quoting and binding process. But then you get to the end policy, and it's like, this is a little bit, not necessarily where I want it to be. And I don't, I don't want to call names out in terms of like the people on the normal lines, but I think anybody listening to this can connect the dots and figure it out. What's going on with new entrants? I mean, do you feel like we're getting more variety that's quality, that's really going to push the envelope to the people who were already there? Or is it more of a situation where we've got new people coming in that are just trying to make it quick and easy, and they're going to try and capture some market share, and then maybe they'll be here in 5 years, maybe they won't?
Yeah, probably a little bit of both. I mean, we see a lot come in. We see stuff come in where we look at it and say, yeah, we vet our carriers very carefully, obviously, and we see carriers that come in where we're just like they don't have a real plan. They don't understand this business model. They don't understand. It's not uncommon that you see technology people jump in and think that, oh, we're gonna, we do technology, we're gonna lump cyber on top of it, and it's like it's a little harder than that. So we really look at it, with new entrants, it's more that I feel like the people, because I might see a carrier that's only got a few years of experience that has come on with something new. But if I look at it and say, okay, well, the people, kind of the top people in their shop, they're people I've known for 15 years and they've been in cyber for 15 years. I'm going to feel pretty comfortable with them. I'm going to feel like, okay, I'm going to definitely give you much more time a day because you've got the experience. But when you see stuff coming in that you don't know, that's where it's a little bit okay. We need to see what they're going to do in the tough times before we start buying in. And then same thing like for us, this is separate from the carriers, but from us, we have a platform. And there's been lots of platforms popping up. I mean, a cyber platform is not new anymore. It was new when we first came out with it, but now it's not. But the experience is not the same because a lot of them are built more for we're going to use technology to replace service, whereas we're insurance people. We look at it and say we're going to utilize technology to enhance service, but we're always going to provide the service behind the technology. And that to me, I think is what it's all about.
Yeah, 100%. Anything else about the current market conditions before we wrap this episode up?
I would say, I was talking earlier. I mean, all the indications are saying we should be leveling off, and I'm seeing reports coming out that say the carriers' profitabilities have kind of gone down a little bit. So all the signs are there that we should be leveling, and people might be expecting a little bit more firm conditions coming up. But my experience has always been that it takes longer than you would think. So it probably not going to see much of the hardening happen this year. But I don't predict we can keep going softer. The claims activity is just getting too strong. I don't see how we can go much softer than we are now. So right now, from a buyer standpoint, I mean, you might not find a better time to buy cyber than right now.
Yeah, and that's what I want to talk about in the next episodes. This is a good place to wrap this one up, everybody. We're going to catch you next Friday for our second installment with Mr. Zane Goldthorpe from ProWriters. Listen, reach out to this guy. Get to him on LinkedIn. Go to ProWriters.com. Zane, what's your email? We'll have it in the show notes, but I want to make sure I get them directly to you.
Yeah, just Zane.Goldthorpe at ProWritersINS.com. And I'll
And
get it.
is there an E on the end of
There,
Goldthorpe?
yeah, no, it's GOLD as in dog, T as in Tom, HORP as in Pam.
There you go. Perfect. Sounds good. All right, everybody. We'll catch you next time. See ya.